Hot, hot, hot. Doc here from North America. The numbers are hot, hot, hot. And they are, our federal, 336,000 jobs added in September. And they knew it was going to be warm, it was going to be good, but it is even hot, 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 hotter. And as you can see on the dollar index, let's move that stuff over. Where's that at? Where's that at? There it is right there. So there it is. Jobless rate, September, that is, I believe that's the Canadian one. Is that the American one? That's the American one. 5.5 down 5%, but net jobs overall up 638. Hot, hot, hot. And you can see that the market itself, the stock market has been sold down a little bit, dismissed. There we are. So it's hot, hot, hot. And when we go and look at, we take the turn off the Hinky Ashky, you can see they're reaching up because, again, interest rates up, 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 up and away. That's what they keep on doing, is just moving them up, 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 up. They're thinking that, okay, now I'm hearing something interesting. Month over month, they're thinking it's going to change a little bit there. There it is right there. You can see that was yesterday. It's still not showing us today yet. On our new platform. On our old platform, it's showing it. So let's get over to there. And where's it at? Oh, let's see. Cancel. Let's get that up on the other screen. Basically the fundamental is rates will stay higher longer. Okay, so it's showing the same thing over there. No, let me just go over to J4X again, because J4X seems to be showing us a little bit different here. They're showing that strength right there. Okay, and we're not seeing that yet in the maybe I have to change the data feed. Let me just change the data feed. And yeah, it's in default. Okay, so let's go to this 24-hour. There we are. No, it's still not doing it. They're just showing down yesterday. More jobs, more jobs, more jobs, and more jobs. Oh, let's go to the chat line, too. I haven't done that because I've been paying attention to all the numbers. Let's see. Let's go over to there. And click on that. And there is Dukascopy. Right there. Alright, there we are. Let's try this. No, it's still showing down. But that's, what is it? That's yesterday. Let's see if we can get, I'm not getting a data, why is it not giving us the data feed for today? Let's see. Let's try this. Nope, still nothing. I guess we have to wait. Oh, there it is. So they popped it up a little bit, that's all. And then now they're starting to bring it back to flat. And I imagine Dukascopy, let's give Dukascopy a spin. See if we can refresh that. View, refresh. Well, let's just change the product and come back to it. Maybe that'll do it. Let's just go to the euro. And there is the euro. Where are you, euro? Right there. There's the euro. And let's see how this looks. Alright, so there's euro, and the euro is moving down now, so it's hard. Yeah, that would make sense for the let's move it over to here. See, it showed that it made a little pop and is back down again. And that's on the dollar index. Now let's go back to the dollar index again and see if we can get that feed refreshed. Right there. And that's holding up pretty well still. But we're seeing, and let's just go back to the euro. Because I think markets are a little jumbly in a couple different places at this point. That's what it comes down to. And there's the euro again. Okay, so now euro is marching in the same thing here now. Okay, so it's now see that could that be wrong? What is that? That is what is that? That is the 6th. Yeah. And why is it showing? Oh, that's the euro. Okay. All right. So and then that's the dollar index we're looking at up there. So let's go to euro now. There and there. Yeah. So the euro. Yeah. See, it went up yesterday, moving back down today, but still in a daily buy. So oh, there we go. There's Janos. The market consensus forecast was that there would be an increase. Yeah, 171,000. Not the 336. Market expected salaries and it's all else. Let's see, nonsense on that pop up on J4X. I already told the developer that he pushes too much data, and most of it is rubbish. Interesting. I hear you. I hear you. Yeah, see, a lot of people are starting to think that's a short-term bump on the upside. You can see the stock market right there. They took it down from 4,300, off 50 points basically. Now the question is, will it battle its way back throughout the day? It wouldn't surprise me if it does. It really wouldn't surprise me if it does. All right. For us, okay, there we go. It's starting to lift up a little bit. But what it really comes down to is the euro, the other pairs trades overall, all they can see is interest rates staying up longer than before. That's what it really comes down to. What does that math say for the dollar index? Good, that's true too. Let's put the hinky up. There's the hinky. It's telling us that it wants the dollar index. Oh, that's the euro. So the euro is trying to lift up, and we have it lifting up too. Now, where's the other? Let's go to File, Workspace, Open, J4X Doc, Manhattan. Let's see if that opens it up correctly. Huh. Nah. Where's the slow at? Nope. We're missing the other side of it. Let's see if we can open that up again on J4X. Maybe that's it right there. As it's loading again. No, not at all. Where is... Let's put the daily in there too. And... Alright, let's try it one more time. Open up Workspace. And I guess that's about it. I'm not sure why we're missing the slow. All we're seeing is the fast. Let me just change the product itself. Let's go to the euro. Okay, there. Okay, now let's put the euro up there and see if it straightens out for that. Right there. Yeah, there we are. So the fast is at 46. The slow is at 31. It says that basically it's still lifting. When we go over to here, over to Chicago Quant, we got the same thing going on. It's lifting. It's down. At the moment you can see that right there. It's down. But and we're in a weekly sell. So this is probably a dead cat bounce again, solely because they can't. They can't really take comfort in the idea that interest rates are going to stay up longer, and that's what the math is saying. And the dollar index is not reflecting it as well as the euro against the dollar. Now let's take a look at cable against the dollar. There's the cable against the dollar doing the same thing, moving down in a weekly sell still. So it's just more of a dead cat bounce on the upside here, and then you can see just right there it's moving down also. So the math is basically saying that pressure that we keep on talking about, the firmer interest rates here in the States, is not backing away. That's the problem. And so that's what we're seeing on the stock market. The stock market, it's trying to lift. We got down to under 50, 49, 48.25, and we're now trading at 260 versus 248. So we'll see if they lift it up into the 70s again and stall out. And then, you can see here it's trying to lift right there. This needs more work here. And you can see the very short term. Let's do this. The short term also lifting up, trying to get going. So you can see that strength is starting to try to kick in. This is a minus there, I think. So it's not in the buy yet. That's a minus. And so this would put it into the buy, and we're already banging it up against the Bollinger Band. We're through the manifold. We'll see. What it really comes down to is fundamentals make a lot less sense solely because no one trusts the employment numbers. They figure that it's going to be readjusted over, even into the afternoon today. They think some numbers will be readjusted. Sipping my tea. All right. So what we try to do is we put together the algorithms with the option trading, with the the directional algorithm situation, with the versus just spot hard delta. We go back and forth around here, and so we always have no problem trading hard delta on a very, very short term basis intraday. When putting on a position for a couple days with the weekly and the daily, we like more doing the options. This way you're not getting stopped out. Gives you some time to make a little profit, or wait for a few days, and as long as it stays in the same signal, usually it gives you your money. And so you can see here we're having a hard time getting into the buy. And let's see, jobs added in September. That's a big number. It passed two notable levels during the bounce up. Yeah, I guess that's 60 area, right, on the S&Ps. And at the same time, I looked at when I saw that text of yours about the AMD yesterday, and how they pushed it down a little bit more, but it's in that weekly sell and daily buy. That's the problem with the AMD. Weekly sell, daily buy. I think let's just double check it again on the this platform here. Not there. Okay, so I don't see it there. We have to go over to there it is right there. All right. So yeah, it was down a little bit yesterday, and it's in that daily buy but weekly sell. So it really keeps on showing that pressure. The AMD and the rest of them, they don't see a growing economy. And look, tech stocks are cash sensitive. They're very intimidated by interest rates. When interest rates are low, the tech stocks are really running firm and steady and up. And when the interest rates are high, it puts pressure on them, and the stocks get sold down. What has been impressive to me is how Apple's been holding up. Apple's in a daily buy for 2 days, but at the same time, it's still in that weekly sell. It doesn't want to let go. So it's more of a dead cat bounce than anything. Money's saying, okay, let's average in a little bit more. It's the third quarter, beginning of the third quarter. Earnings start next week. all the magic, all the mechanics is starting next week, which will, have. And there's a lot of good managers out there that actually think that earnings are going to look pretty good, and so that can be a really good positive. So I guess what we'll do is we'll just move along. Anybody care to start off with an option or a product you would like to look in the options? We can do that. We can talk about strategies to that, and take a look at the algorithm and see what should be, which way to play it. As you can see here, we have the stock market sitting on there at the moment. And like I said, the euro is acting, let's go back to the euro. I think we have the cable in there. Yeah, you see the cable, and it's on J4X too. It's trying to make a bounce. And same thing with, let's see, right, let's put it up there again. There it is right there. There's the euro. It's holding up in that daily buy with it even down at the moment, but it's in the weekly sell. So again, it's awful hard to take this bounce anything more than just a dead cat bounce. Just from the sheer momentum of it all. All right. Any other opinions or questions? If not, we'll go over to the Swiss franc. There it is. You can see we went into the daily sell yesterday. It's doing the same thing. It's feeling a little pressure against the dollar. Doing that same thing. And it's been in a weekly buy for a while. I've been saying it for months here. Our interest rates are going to stay up. That's it. They're not going to reduce them. The Fed is terrified. It's bad enough it's got a bad rep now. But they're totally terrified. If they lower interest rates or stop raising interest rates, and they accidentally falsely make it sound like the thing it's over with, they're just terrified that they'll be wrong. I'm taking a sip of that tea again. With them playing that foolish game for a year and a half, almost a year and like 3 months, where they kept on saying inflation was transitory, they've lost their credibility. That's the problem at this point. As much as Janos has talked about the fact that fundamentals don't seem to work anymore, well, the Federal Reserve had an opportunity to be the last man standing in a sense. In other words, the last good voice. Instead, they sat there for almost a year and a half, trying to tell us that inflation wasn't real. And that's, you lose a lot of credibility. So people just don't want to trust the Fed's opinions about anything. They know they control all the money as it is, but trusting their opinion now is almost non-existent. All right. From there we go over to the yen, which is kind of interesting the way look at that. Yen has jumped up now to the buy. We'll be watching that, and we'll be a little surprised. Let's put it up on J4X. Right there. It's popping. The fastest at 60. Wow, that's flying all over the place, isn't it? 61 a few seconds ago. 64, 60.4, 60.6, 60.5. Slow is at 62. So it's trying to tell us that the strength is still not really there. But looking at the price, boy, is it there. Now, we're in that weekly buy. So it's not like we're surprised that we're seeing strength kick in again into the dollar against the Japanese yen. You can see there on J4X, it keeps on bouncing around the 149.40s area. 46, 45. Let's see, where is it at? 60.5. And the slow is at 62, so it's still trying to give us a bear signal. But it's close. You got a green hinky going on. and the fast and slow stochastics are banging against each other at the moment. And that was our label too, I think, yesterday. We talked about the idea of a fast stochastic versus a slow stochastic, using two different stochastics, the way we do here on J4X, right there. And when the fast goes higher than the slow, that usually is a good sign of strength, and vice versa. So you can see here the Hinky has started with the green. You see over here on Chicago Quant, we got a green dot, and we are definitely through the zero line right there. And again, the problem is that we're in a weekly buy, and this thing goes into a daily buy. They may go take out that 150 again, and that could be real pressure again on the market. I wonder what they're doing to the bond. Let's take a look at the 30-year bond. There's 30-year. Oh yeah, look at that. We're like a 23-year low now, or I guess you could call it a 23-year high. So interest rates are at a 23-year high since Bill Clinton. As we take a sip of our tea. So yeah, interest rates now are in like 2020. Oh yeah, 2020. 2000, the election year. That's the pressure, right there, interest rates. And you can see we've been in a daily sell for a while up in here. That whole ride down, it's been in a daily sell. It's been in a weekly sell even further back. Let's see if we can show you. There. We've been in that weekly sell since back in here. So this thing is going from the 128 area down to the 109, going into the 108, 109.7. A lot of pressure. And like I said, since the Federal Reserve screwed it up royally, I mean, just made a grave mistake to stay political and not accept inflation for over a year and a half. It makes it very hard for them to say anything now or do anything without looking foolish. So in other words, if they dare to lower interest rates like the way the market keeps on trying to tell them to do so, then if inflation takes off, they will be just devastated. The amount of critics against them will be enormous. All right, let's go back to the currencies again. Since no one's asking about options or anything else at the moment, we'll go to options in about 10 minutes. But we can jump to it sooner if someone asks. All right, now let's go over to the South African rand. Oh, no, Turkish lira. Here we go. Let's get the Turkish lira up on the screen. Right there. You can see we're in a daily buy for 2 days, and they're just showing a little weakness there. And it's in a weekly buy for going on 4 weeks. And so that's the strength there. And we're not really surprised ever since they lowered. This is where they lowered. I guess we should put a box there, really. Like that. And we'll just go put a yellow in there. There. And so that right there, that box where that big drop, they increased interest rates to 25%. And also the Russian Republic has done the same thing. They've pushed their interest rates up there because I think at this point the ruble's trading around par. So it's like 100 rubles now to a euro. All right. What else we got going on here? I guess that is that. So from the Turkish lira, and you can see the strength that's in it. We just don't believe that 25% interest rate is going to help it over time. It's stalling it at the moment. That's a good thing. But it doesn't. I don't think it's going to stay down. I think it's going to find a way to go back up. All right. From there, we go over to the South African rand. There's the rand lifting again. So more than likely, let's go over and take a look and see, but more than likely the metals complex is headed down. And there's gold. And it's heading down, as you can see. Still pressure on that. And it's been in a daily sell now for almost 9 days. Or is it 10 days? 10 days. 5 and 5. It's 10 days. And we've been in a weekly sell since right there. Since that one right there. So there's that pressure constantly hitting onto the metals complex. And let's put the South African Rand up on J4X so we can at least point it out. And there it is right there. You can see as it keeps on marching up, gold finds a way to march down. And that is the nature of it all. Leisure, 96,000 up. Government jobs, 73,000. Private education, health services, that's kind of government too, 70,000 up. Professional business services, 21,000. Transportation and warehouse, 8,000. So really the private sector is, what's that, the 28 versus, it's like only 10% of the employment number is private sector. The rest is government, be it government employees or government quasi agencies, that type of thing. All right. All right. From here, and you can see there, we see ZAR. That's the South African Rand, the most powerful brick. We'll take a look at silver. Silver, same situation. Notice that they seem to be kind of trying to dig their heels in a little bit there. There's silver trying to act like it's coming towards some type of end. I'm not sure if they're coming to an end, but one thing is for sure, they're feeling the pressure of increased interest rates. And then we take a look at here it is right there, copper. Copper's flirting with a daily buy. Every time we turn around, it seems like it's trying to find a buy again. And then from there, we'll go over to the platinum. I think platinum is getting smacked down again. Yeah, it's down again. It's at the 850 area, 860 area, January contract. Yeah, they're saying. So, basically almost 80% of the increase in jobs is in government. Yeah, so that's 250 out of 175,000, or say 180,000 out of the 180,000 jobs increase. Only under 30,000 out of the 180,000, only 30,000 is private sector. The rest is education and government structure. So that's no wonder the markets are frustrated, because all that does is represent more inflation, unproductive jobs. Just or a slow economic. Jobs that are not private sector don't grow as fast as private sector. Private sector jobs increase profits everywhere, or at least a bulk of them. But government jobs increase nothing but bureaucracy and slow down business. You got to grow out of this stuff, and for some reason they don't seem to understand that. All right, from there, let's drive over to. We'll look at the energy sector, and then there's crude oil is basically flat. Excuse me. And you can see we are flirting with the weekly sell this week. And let's see, where else are we? Let's take a look at, where do we put it? Let's put Canadian up on J4X. And there's Canadian. And you can see all that green marching up. As it goes up, the crude oil goes down. That's usually the way it works. Oh, Trump has endorsed Jim Jordan for House Speaker. All right. So from there, we take a look at natural gas, and there's natural gas. Climbing for the last 3 days. You can see it's in a daily buy. It's also through the weekly buy back in here, so it's very comfortable on the long side there. Let me see. And then we go over to let's put Brent up. I think it's BZF. Let's see. Yep, there is Brent. Let's put Brent up on this screen here. There's Brent. When it basically almost touched 100 and rolled over. It's basically hanging about $15 down, 15%. Is it about 13%, 12%? And you can see the weekly, closed in a weekly sell last week, and it's still pressuring it this week. All right, now from there we'll go over to the energy company in Spain just to get a flavor of natural gas, since the United States natural gas is lifting up. Let's see, where is it here? No, not there. There it is, right there. And so you can see there, what do we got here? The product is trading at, it's in a weekly sell. We're still in the 25s. You can see it's lifting up a little bit, nothing major. I saw where Germany is cranking up the coal-fired electric generators. So that will take pressure off of natural gas. And this way people don't freeze to death. More people, it's almost like a 10-to-1 ratio. More people freeze to death than die from heat exhaustion. That's a really big number. So they've got to defend against that heat. All right. What else can we say about any of this? I guess we can move over to the start to think about the options. We can have a conversation about the algorithms and options. So in other words, when we're looking at, in this case here, natural gas, you can see here it's in a daily buy, and it's climbed through the manifold here, so that automatically, like 3 days ago, put it 99% chance it's closing in a weekly buy. So it's all right. You could be playing this long side right here. And so the object would be is using binaries. It's buying bull call spreads. So what is a bull call spread? What happens is that, let's say you were buying the $3 call and selling the $3.40 call. That's a bull spread. And if you're doing it in currencies, like in say euro, let's put that up on the screen again. And that is a South African rand. We went into a daily buy here. Let's show you where that's at. Okay, and there is the buy right there, and that is what, 1, 2, 3, 4 days. That's 5 days back. And we're in a weekly buy. We went into the weekly buy last week. I'm not sure why the line's not there, but we'll fix it again there. So there we are right there. When closed in a weekly buy, daily buy. So you would have bought, in this case here, this is the South African rand. You might have bought the 19 call and sold the 19 and a half. Something like that. And that would be a bull spread. That's a call bull spread. And you're basically trading for the idea that the rand is going to keep on losing money. Or, losing against the dollar. And basically, just losing against the dollar. And so that's pretty much where we're at. All right. Now, from there, that would be a binary or a call spread. But what it does is we're looking at where you buy one option and sell another option, so you reduce your cost, you reduce your risk. Yep, looks like Jim Jordan is going to be the next speaker. He's going to be great. He is very organized. Interesting, they're talking about that. It's going to keep on going, the investigation, so you don't have to worry about that. All right, now from the South African Rand, we've looked at the energy company in Spain and so forth. You can see it up on the screen there, and pretty much the pressure is going to be winter coming up, and since the German Republic now is turning on all their old coal-fire electric plants, people more than likely will not be freezing to death as much as it could be if they were using these, I don't know what they call them, renewable. I didn't know you could renew energy. That doesn't seem to fit E equals MC squared, but anyway, that's what they like to call them, renewable energies like windmills and what else is there? I guess windmills. There must be something else. Oh, solar collectors, yeah. Solar collectors and windmills. So they're not going to get much more traction than what they've already gotten. From there, we go over to, let's take a look. We've looked at energies and we've looked at metals. If anybody wants to see anything in either one of them, just let us know. Let's go over to the energy sector. Stock market. Let's take a look at the stock market. There's the S&P 500. We were flirting with a daily buy until that news came out. Now they smacked it. And we've been in that weekly sell now for 4, 7, 9 weeks. And the fast has been in there for 11 weeks. So that pressure. They're interviewing the Dallas mayor who switched parties. Leaves the Democrat Party. He's become a Republican now. Okay. So, they have the Democrat mayor, or used to be Democrat mayor for Dallas, Texas. He is now a Republican. All right. From there, we go over to the Tech 100, right there. And that's trying to get through. Look at that. It's through the zero line by 5.17. It was really pushing up, showing some life. We're really close to seeing this thing get into the weekly buy. And not weekly buy, but daily buy. Weekly buy, it's been in the sell now for 3, 6, 9. This is a 10th week in a sell. And the fast and the slow, as you can see, you'll see it in a few seconds here. They went into the weekly sell together. And it was a nice little sell-off and then bounced back up, and now a nice little sell-off. And they're trying to dig their heels in and try to firm up a little bit in there. Okay, let's take a look at the Dow Jones Industrial Average right there. Same situation. That's been in a daily sell now for 6, 10, 15, 16. This is the 17th day in a weekly sell. A daily sell, daily sell. And you can see weekly sell, 17 days on a daily. And it has been, this is the 7th week at least in a weekly sell, if not more. Now, Let's take a look at that was the Dow Jones Industrial Average. Let's look at the Russell 2000, which has been leaking and leaking and leaking. And there it is right there. We're in the low 17s now. This thing was trying to get into the buy. So you can see there the weekly is pressing down still like it's been for months. Yep, right there. Oh yeah, they've got some really weird stuff. I think I mentioned it yesterday. President Biden now wants to add 20 miles of wall. I don't understand it. He's a strange guy. He is saying that he doesn't want to build the wall, but he wants money for building the wall. None of it. And he's been selling all the metal that's there for 3 cents on the dollar. So for $300 million worth of metal, you can get you can pay $7 million for $300 million worth of metal. And now he wants money from Congress. I don't think he's going to see the money. That's definitely out of order. All right, now from there, why don't we take a quick look at where's it at? Let's take a look at the Bitcoin right there. And you see let's reset it a little bit, refresh it. So it pushed it into a sell yesterday. Let me just double check it over here. Excuse me. Not there. So I got to go up higher. There it is right there. Yeah, pushed it into a sell yesterday. Looks like both of them have. Okay. Yeah, pushed into a sell. So you can see the pressure here. Even the cryptocurrency is moving a little away from the long side. Now they do have options on that. You can trade the futures contract, and I think Ethereum also has options on it. And I think that Coin, COIN, have options on it. So there's a lot of different ways you can trade the crypto now on the exchanges. No William Bakeman Freedom, whatever his name is, type of stuff. No shenanigans. All right, from there we'll slide over to we've done the stock indices, and we've looked at the crypto with the stock indices. So let's go take a look at, we'll finish it off here on Friday by looking at AMD, Google, and I forget what Janos liked the other one. He had 3 that he was paying attention to. So let's take a look at AMD. Oh, it was Meta. That's what it was. There's Netflix. It's been in a sell for a couple of days, and weekly sell for 4 weeks. So let's take a look at AMD right there. And you can see there the pressure's been on the weekly. It's been in a weekly sell for weeks. And you can see here on the daily, they took it down a little bit. Oh, that's it right there yesterday. No, wait, today's the 6th. So there's the 2nd, 3rd, 4th, 5th, and there's the 6th. And so they're feeling more pressure today. Still in a daily buy, needs to break down, and it's in the weekly sell. So obviously you don't want to be playing the long side here in that product. It's all really pointing in the downside. And the daily, maybe when the daily gets into a sell, it'll give it a good signal. All right, now from there we'll go over to Google, and there it is right there. And Google, same way. It's been in a buy for where the green line is right there. And it wasn't a weekly buy. And now we are flirting with the sell. So in other words, if this thing goes into a daily sell with the way it's in the weekly sell, then it would be time to buy put spreads or sell call spreads. That's one or the other. So you'd be selling a bearish call spread or buying a bullish put spread. Remember, when a product goes down, put options go up in value. When a product goes down, the call options go down in value, and vice versa. When a product goes up, the call options go up in value, and when you do it without, if you stand to the side and just calculate it, it's the same thing. Okay. Right. Now, from there, we saw Google. Let's see what Meta looks like. And there's Meta. Oh, I think we're using a 5 on it. That's what it is. Just because of the volatility. There it is. So it's still in a buy since back in here. None of this is real anymore. Biden's administration now wants to build the wall. Just for 20 miles. I don't know. They are a strange bunch. Definitely a strange bunch. I don't even know how to even describe their nature. Now, because of that wild, woolly move, let's go see since we have that chart up, let's see what Goldman Sachs looks like this morning. It's been in a sell for days. It's down today, and it's trying to lift up, actually. It's been in a weekly sell since back in here, so it really hasn't done anything magical with that weekly sell. I mean, it went down a little bit, then went up, and we went into a buy right here. Actually, where are the dots at? Okay, let's do this. Let's see. Up and okay, and down and there you are. So you can see we pretty much, let's widen that out. So you can see here we're actually seeing a little performance strength right at the moment. It's showing some life, and this is the Goldman Sachs. So notice the last couple of days here, the product is sold off and seems to be stalled, trying to rise. It's actually trying to lift. Well, that's very curious. You can see the weekly is hanging out down on the negative side there. Let's put the line in there for the, there's the 0 line right there. So we're really, just still some pressure on it. Maybe next week, it could be next week's business. We might start to see some strength start to kick in. Again, money is going to start anticipating soon. We will start to see anticipation of buying. In other words, with earnings coming in and everything else. End of year and elections. Matter of fact, there's that now. Remember, we were looking for the get up into the 70 area. There it is. It's trading at 70, 69.50. Just trading right at that 70 area. You see it's flirting with it now. We'll see if that thing starts to hold up and we get back. I mean, it won't be much for it to get back to unchanged for today. And the Dow Jones Industrial Average, which was down 240 points, is only down 68 points now. And that's pretty much the action we're seeing. Now, what else can we call this webinar today? We have to come up with a name. And no doubt it's been a exciting day because of the employment numbers. And so, what else could we say about it? I guess fundamentals move the markets. I think that's honestly the way it looks like today. Fundamentals did move the markets. And with the Federal Reserve not really comfortable with having to deal with inflation. I mean, their answer to inflation right now is just to slow the economy down instead of growing out of it. And that's been a very strange thing, because as far as modern economics, since Ronald Reagan, we realize you grow out of a recession. You don't hurt your economy. You grow out of it by increasing labor, lowering government regulation, lowering taxes. You do all those, and you grow out of a recession. All right, so we're going to name this particular webinar today is Fundamentals Affect the Market. Fundamentals fundamental data affects markets. There we are. And title. There we are. That's the title. All right, traders. Everybody have a safe and smart weekend. And we'll catch you all on Monday, which will be TGIM. Thank goodness it's Monday. All right. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.